Once you realize everything is debt, it changes your whole perspective on the financial system. There's a lot of things that I've been talking about for years that are now coming to fruition in terms of cracks in the system. But of course, there's a lot of information that is overloaded towards you that distracts you from what's really going on under the hood. But I'm gonna break this down for y'all right now. So, BlackRock is one of the largest financial institutions in the entire world. They have ETFs, private equity, private credit. They own real estate. They own real estate investment trusts, etc. They're facing some issues right now because their private credit fund is limiting how much investors can pull out. And they're doing this by capping some of the withdrawals. So as a result, individuals that may be investing in the private credit fund are unable to take their money out because BlackRock is preventing them from doing so. This whole private credit situation isn't anything new. You had companies like First Brands, you have this company Tricolor that were essentially leveraging loans, right, from car loans, packaging up these car loans, and then securitizing and selling the debt to other investors. But as a result, a lot of fraud, a lot of issues and cracks in the system have been coming to light. Now, bringing it back to BlackRock, this is a situation where they have a private credit fund, and essentially what they're doing is they're raising money and they raise capital from investors. And these investors are essentially saying, hey, we're totally fine with giving you some of our money, and we're trusting that you're lending this money to companies that are able to be creditworthy and will be able to pay back the debt to you. They'll be able to make their interest payments and then pay back the loans. So what happens is BlackRock essentially is paying investors on the other side a return based on the likelihood that the companies that they're lending the private credit to are going to make good on their loans. But what happens when other companies and these companies underneath the hood that are essentially on the hook for the private credit don't make the payments? Well, that means the investors can't get their money back. So any investor that invested into the private credit fund from BlackRock and maybe some of these other companies, they're essentially sitting there like, yo, where's my money? In low interest rate environments, private credit does not become as feasible because debt becomes cheaper. And what we saw is over the past couple of years, especially like post-COVID, as interest rates were going higher and higher, that made private credit and alternative lending facilities more attractive to companies and corporations that needed financing for projects. These private credit funds are essentially regulated in a different way, not like SEC. The SEC is looking at them the same way they look at a public stock. The reason being is because it's private and a lot of this stuff isn't available to retail investors. There are some private credit funds that are accessible to retail investors, and there's a lot of issues with those too. But what they do with those retail fund, private credit funds that retail investors can invest in, they end up giving them higher yields that attract more investors to want to buy them. There's some that, are issued by companies like KKR, Bain Capital, Specialty Credit Financing, etc. But all these private credit funds are essentially seeing the same issues right now, where a lot of companies under the hood that are essentially on the hook for the loans that they received are probably having issues paying back the debt. Private credit in this entire system is a huge component of the financial system, huge. And when lending and private credit and all this stuff starts to have cracks, it doesn't look good, and it doesn't look good for the state of the economy and the markets. Most people only understand the stock market as it pertains to buying public stocks, but they have no semblance of understanding of how the entire financial system is one big coordinated effort, right? Everything builds on top of each other, and especially private credit being one of the foundational aspects. People want cheap debt, or people need access to lending, period, because it's one big debt Ponzi scheme. If you take a look at this debt clock, if you look in the top left, the US national debt's at about 38 trillion, but then you have off balance sheet debt, which gets it even higher. You have derivatives to the tune probably of quadrillions. I don't even know what that looks like. It's ridiculous. But the point that I'm trying to make to you is that don't trust just what you see in headlines, understanding the inner workings of the financial system and taking steps day by day or week by week to learn a little bit about how this all impacts you is very important. We're at the stage of the game where people have to understand the difference between hard money and a printed piece of paper. And everything that you're seeing right now with private credit, the debt levels, loans, credit, buy now, pay later, you name it, is perpetuating the debt-based Ponzi scheme. If you don't understand at this point that currency and paper is printed out of thin air, and money, whether it's gold, physical, silver, physical, or Bitcoin, to some, right, is money that can't be printed or debased, that's something that you really, really want to read up on and understand. At the end of the day, if you take anything away from what I'm trying to explain to you, you're going to want to buy assets and you're going to want to hold assets. You're going to want to eliminate debt that you have, especially high interest credit card debt, and get yourself in a better financial situation. Because we don't know how this private credit situation is going to pan out, but I can tell you the powers that be are not going to let the system crumble. They're essentially going to print money into oblivion to bail out that private credit market. And I'll revisit this video and make a follow-up once it all comes to fruition. Because at the end of the day, the debt-based Ponzi scheme is what keeps it afloat. So if you like this video, like, comment, and share it with a friend. Follow Sent Me, and keep being a little bit better each day, y'all. Peace.